everybody. Welcome to Bank Millennium Conference after second quarter. On the bank side, we have today Chairman of the Management Board, Mr. João Braz Jorge. We have Deputy Chairman and CFO, Mr. Fernando Bischu. We have also Chief Economist, Grzegorz Maliszewski. My name is Artur Kulesza. I'm Head of Investor Relations. And as usual, we start with short presentation on our results, main highlights, and this will be followed by Q&A session in about 20 minutes. The presentation will be conducted by CFO, Mr. Fernando Bischu.
Thank you. Good afternoon. Thank you for attending the presentation of our first half results. I will start, as usual, by the brief macro overview. As you can see on page number 4, we have had a stable interest rate environment, and our expectation is that this environment will remain stable in the nearest quarter, so we are not expecting any relevant changes in the interest rates. We also had some fluctuation of the Polish yield curve during the second quarter, flattening, but also we can say that we are not expecting relevant changes in terms of the average yields of Polish bonds in the nearest future. Regarding the FX rates, as you can see on page number 5, some depreciation of the zloty in the quarter, but if we take a longer perspective, in fact, year on year, the zloty was flat versus the Swiss franc, a little bit weaker versus the euro, but anyhow, some short-term impact in terms of the evolution of the loan portfolio, but we are not expecting also major turbulence in the nearest future. In terms of other macro information, the GDP growth is in line with our internal expectation of having an average growth somewhere around 3.5% during the year, and we also see some stronger private consumption growth during this first half of the year, which partially is also the reflection of the higher disposable income from households, which is also being driven by clearly strong growth of wages in the Polish economy during the last 12 months. And of course, this is supportive for private consumption, but also that disposable income growth is also good in sustaining a good financial condition of households, which is important for the fulfillment of the credit obligations. If we look on page 6, the data that we were showing was until the end of May. Anyway, we have already the final data from June monetary aggregates that was released yesterday evening, and we can see that there is a stronger growth of loans to households than of loans to companies. I think this is an important conclusion from the data that was recently released, especially if we exclude FX impacts. So we have loans to companies growing year on year without FX 3.2%, which is relatively low, while loans to households are growing at around 4.4%. And on the other side, we have much stronger growth of total deposits than total loans in the Polish banking system. 11% total growth of deposits versus 4% growth of loans. And it is impressive that both household deposits and corporate deposits are growing double-digit year on year by the end of June. This shows increase of disposable income from households. Probably also partially reflects the bad situation in the capital markets that is also not very favorable for alternative investments. And on the corporate side, also shows, in general, good financial condition of Polish companies. On the other side, may also show some retraction in terms of the speed of new investments. So against this background, in macro terms, we had a strong first half of the year, as was already expected. We had a first half net profit of 431 million zlotys. That was supported by, in the second quarter, by the extraordinary gain on Visa shares. The second quarter net profit reached 294 million zlotys, and as a consequence, the return on equity annualized is at 13.1%. More important than the one-offs is the fact that we had a strong growth of core income by 6.4% quarterly and 2.6% yearly, which was driven by a solid improvement in net interest income that grew by 7.3% quarter on quarter and 8.1% year on year. On the other hand, net commissions already rebounded in the second quarter by 4% versus the previous quarter, but on a cumulative basis are still 10% lower versus the first half of 2015. We continue to show solid asset quality with a stable impaired loan ratio at 4.6%, impaired mortgage at 2.2%, and the cost of risk year to date at 45 basis points over total net loans, still lower than the average of the last 5 years. We also continue to show very strong liquidity and capital ratios, loan to deposit ratio at 87%, and the total capital ratio at 17.3%, with common equity tier 1 ratio at 16.9%. Moving to page 9, the net profit in the first half of the year was higher by 31.5% versus 1 year ago. We had the positive impact, gross impact of 283 million zlotys from the Visa Europe transactions, so around